Day one of just practicing ICT concepts. Just using these ICT concepts to try and figure out how can we be able to take these trades in the market. And one of the easiest models you could learn from ICT is the 2022 model, which involves just liquidity and displacement and a retracement for your entry. So let's get into the charts. This is how I caught good pips in the market. So now, if we look at the chart I'm having, this is XAU USD, and it's on a daily time frame. I want to find liquidities that I could use in the market, but from a higher time frame. That means basically from the higher time frame, I can be able to scale down and try to find more of what I'm trying to look for in terms of entries. Now let's start. First things first, I need to identify where my liquidity levels are resting. So this one here, I can label that one as a sell side liquidity because it's a swing low. Now again, if I put another line here, this one can be regarded as a buy side liquidity. So my range for trading is going to be within this particular level, and I'm trying to see where am I able to put these things together so that it goes back into giving me a very, very nice entry. So those are liquidity levels, and then I'm going to mark inside here, which is the ones I'm marking right now is levels in the market where we have key levels. So for example, when you have a fair value gap in the market like this one, I can use that one as a key level. So I'm going to mark that one as it's supposed to be a daily fair value gap right there. Now, I have a daily fair value gap on a bullish market. If I'm going to grade this market in terms of premium and discount, whatever that's resting above here is premium. Whatever that's resting inside this key level is going to be um, on a discount side. If I wanted to be a participant from here, I could take a bullish continuation from here if we respected this particular fair value gap for bullish continuations. Instead, we didn't. What did we do? We traded lower, went back up, and then we have a break for market prices again bearish. So you'll notice something. We didn't respect this particular fair value gap, and that one turns from being a normal fair value gap and it goes back becoming an inversion fair value gap in the market. So if you have an inversion fair value gap, how do you identify inversion fair value gaps? That one will be dealt with on another episode. But again, the easiest version of identifying inversion fair value gaps is after the market has traded through a bullish one. For example, this one was a bullish one. We had a closure for market candle through it, and then the second one also through it. That makes that one an inversion fair value gap. Now we have a very clean inversion fair value gap. When we made this low, the market went all the way to look for that inversion fair value gap. So how am I formulating my trades from there? So we traded into the inversion, and then we came and then we broke here. So I can regard this one as a market structure shift because of this displacement. Now, according to ICT, when you have the market trading into a key level and then you have a shift in market structure to the opposite side, you're looking for a place where the market is going to rebalance before we have a continuation. And for this case, you'll be looking for a premium level that the market is going to mitigate. This is episode 1. Please guys, not that I know how to do these videos, but with time I'll get to learn and much of the videos will come along. This is the last bullish candle before the displacement to the downside. So I'm going to label this one as an order block, but a bearish one. So we have a bearish order block at this particular level. So with the mitigation into the inversion, we already have our buyers. Now that when the market comes into this, we will be looking for full displacement for market prices lower until we attain this particular sell side liquidity. So with that in mind, we can drop to the time frame alignment with the daily, which is going to be the hourly. So on the hourly, what you notice is that this is what I am using as a shift in market structure. This is where we had our order block. If I am to scale this order block so that I have a smaller range, I'll identify this series of bullish candles here, and those ones are going to give me um, a level in the market where I can use for bearish continuations. A series of bullish candles before an impulsive move is a bearish ICT order block. So with that in mind, I can now just put like that for clarity. And now, the first thing you do before you take any entry into the market is you look for confirmations, things that are going to align you with the buyers. And I could identify this particular level above here as a short-term buy-side liquidity. In other words, it's just liquidity resting in form of a swing high. So this is a swing high. There's another internal swing high here that was taken, and you will notice that this is liquidity because even though the market is trading above them, we don't have a displacement. We only have a sweep above it. So now we have an hourly order block. We have liquidity which has been swept, and then I'm looking for an entry on this leg. So I'm going to drop to 15 minutes for this case. And then on 15 minutes, I'm looking for very clean shift in market structure. And for this case, my shift in market structure is here. So this one for a shift in market structure. The reason as to why this is a shift in market structure is because after the sweep to the upside, this particular level here is a rejection block. Now we can't mark everything in the charts. Our charts are going to be insane. So what did we do? We displaced to the downside, much more to the downside, and here we have a series of market prices going lower, and then one time we shoot up, back down, then back again up. What is it that the market is trying to target? If I want to be a participant for a sell, I'm looking for the markets to trade into this particular fair value gap. And like I said, a series of bullish candles, when they are traded below, they become the ICT bearish order block. So this is a 15-minute order block plus the fair value gap. I'm going to put in my entry from here. Then my stop loss goes above the structural high. Then my risk to reward ratio is going to be big for this one because I am targeting to see the markets retrade all the way to that sell side liquidity that is resting down there. So a bit late for this particular prediction on the market, but regardless of the same, that's how you could have got that particular good movement to the downside. So far so good. We are almost reaching to our take profit, and more probably we might trade a bit lower from there, something like an extension of like 20 pips from here. Market is going to definitely achieve that. So that's our take profit for this particular trend. We'll be having more episodes coming in for just updates on the market. Stay tuned. Make sure if you're reaching out here for the first time, just consider making sure you have that for subscription button. All right. See you on the next one.